It's Wednesday. That means it's time to check out some DeFi charts, see what's going on in the DeFi realm. Doing the weekly scan of the higher cap DeFi charts that I've heard of. I asked Twitter what they're watching, and most of it I've never heard of. So I'm just going to ignore those for now. And maybe next time when I ask and I recognize some names, I'll look at them. But I shudder to think what those charts look like in their early stages. Let's start off with Bitcoin dominance. Kind of a market gauge, weather vane, just what's going on with alts. If alts are gaining dominance, then that typically suggests we are in alt season. If alts are losing dominance, that means Bitcoin's clearly the winner of the day. Right now, we are above the 200-day moving average, which is another sign that it's stronger to be in BTC than any altcoin, including DeFi. So I don't know if any of this is necessarily a tradable signal, but it's interesting to look at. This is the DeFi perp from FTX on the 6 hour. And I kind of feel this way about most of the DeFi charts I'm going to talk about here. There isn't really anything that sticks out to me. A few weeks ago I said that because of the structure on the way down for this index, it's going to be tough to just climb out of that on the first go. You know, typically resistance becomes support, support becomes resistance. So it's going to have to deal with all of this previous price action to cleanly break above it. That's just my initial read. You know, there's a time to trade this, right? When it's falling wedging or rising wedging, you're long, you're short. Right now, I'm not seeing much of anything. And that's kind of the case for some of these coins. And I'll be more specific in a minute here. If we look at Link USD, all the charts will be on USD pairs. Most of these are on Binance just because there's more trading history there, more volume, more liquidity. But if we look at the Link chart, it is still in the multi-year pitchfork, still above the 200-day moving average. Looks great on the USD pair so far, still near the R5 yearly pivot, which is insane for anything, let alone Link, which probably hit its R5 last year as well. So it'll be interesting to see what the R5 is in 2021 and if that's possible to even hit for a third year in a row. But this trend looks exactly how you want any trend to look, just trucking along, hits the highs, hits the lows, returns to the mean, and just keeps going. So Link is probably the safest of any of the coins I'm looking at. Not that any of this is financial advice, just educational information. AAVE below the 200, below the cloud. This will be a great trade once, like it did in November, it rises above the cloud again. Historically, these Kumo breakouts have been excellent on the hourly chart. So might even want to watch this on the 2 hour or the 4 hour. What you'll see there is TK across recrosses, most likely, similar to here. But if it can capture these trends like it did in November, I mean, what else do you want, right? You're in for 80 to 90% of that. So in the next couple weeks on the hourly, you know, this would be definitely alert-worthy setups here for AAVE, something that you could just look at once a day and say, you know, is it above the cloud yet? Is it above the cloud yet? Is it above the cloud yet? Still not there currently. USD 6 hour. So a lot of the charts kind of look like this. They're in this heavy consolidation zone, heavy volume resistance zone. You know, this isn't a long trade for me. This isn't anything for me. This is a wait and see. It's in the cloud. That means it's a no trade zone. Once it dips below, it gets more bearish. Once it dips above or flips above, it gets more bullish. But it pretty clearly looks like 380 to $4 is the line in the sand. If it's above that level, then it's probably good to go for a bullish rally. So just set an alert at $4 and, you know, wait for that to happen, right? Like there's no reason to trade this right now, in my opinion. SNX, been talking about this one bullishly for the past few weeks. It had a falling wedge, broke up, hasn't really hit any target necessarily. You know, some of these targets for these falling wedges are either 50% of the wedge on the way up or some 1618 of high to low. Right now, it looks like this is morphed into some sort of head and shoulders situation. You know, this might not be verbatim what it looks like in a chart pattern textbook, but this doesn't give me long confidence. You know, I see 3 highs that look like a head and shoulders. I do not want to be on the long side of that trade. Currently kind of at support at around 455 or whatever this is. So I can easily see this like failing to the downside, back to around $3, below the 200-day moving average. So I think this one as well is kind of done for now, and really uninterested in it until we see higher highs, because it just doesn't look like it has a bullish bias right now. Plus it's got plenty of volume resistance on the upside at 6, at 5, so arguably down is path of least resistance, at least until $3. So definitely another wait and see there. UMA again, like Uni, right? This isn't, there's just nothing here, you know, it's below its high volume area, its pivotal point or whatever they call it on the VPVR. This big level here, this here big level at $8. So until it's above 8, until it's above 9 even, there's another level here, a bunch of highs here. I mean, there's no trend here. This is just sideways nothingness. No trade there for me at all. YFI had some strength over the past week. Volume died way down. Another big tell on some of these highly traded coins with liquidity. Look at the volume. If the volume drops way down, that's usually not bullish. You know, we can be consolidating and establish some sort of declining volume profile that will lead to an eventual bullish resolution, but I don't really see that as the case here. I mean, volumes dropped way down. So it's kind of at a key support at this $2,500 level, $25,000 level, along with the 200-day moving average, 200 period moving average. This is the 4-hour. All sorts of messed up. These are my charts and I don't know how to read them. All right, 25K, key level based on volume. This was also kind of a key level for the head and shoulders here at around 22K. Not a head and shoulders here, not as bearish as it obviously was here. You know, there isn't necessarily a pattern here. Arguably some sort of bear div on higher time frames because we did get a higher high and less momentum, but this is just a milk toast again. It's not as neutral as, you know, UMA is, but it's definitely not as bullish as some of the other stuff is. It's just, there's nothing here. It's wait and see or just sit out for me. Comp, on the other hand, I feel like the move already happened, but you can see just how insane something clearly happened here. I don't know enough about any of these to really comment on the fundamentals, but very clearly a strong reversal. You know, you had this multi-month decline where early adopters, most likely, or whoever was selling, and you get a series of higher lows in RSI. So you're getting a multi-week bullish divergence, okay? That pops up, gets smacked way down again, hits that $100 psychological support resist level, and then just rocket ship from there. You know, disrespecting the VPVR levels completely, just straight up recross on the EMAs, even on the cloud, it just looks silly. I mean, it just doesn't make any sense really. But nonetheless, this was a bullish Kuma breakout and it did lead to higher highs. No bear div here yet even. I don't know where this goes from here, maybe 200, but it's almost divorced from TA in the moment, because if this didn't bounce at 100, it was definitely retesting those previous lows. And right now, there isn't really any, you know, local highs to even think about retesting other than 230, 250, if not the 200 psychological resistance. So I don't know. I think it's too late to get in though. I personally want to see it pull back again before jumping into that one, just because it looks like an insane rocket ship to me. Ren, again, sideways, uncomfortable looking, not a long for me. Last week I talked about this potential triangle that it's now sitting on the bottom side of, if not below the 200 moving average on the 12-hour. Likely get a bearish cross for the first time in a while on this 5200 below a key VPVR level. So it's ticking all the boxes for, this looks like it's going to go lower to me, maybe a quarter, something like that, but definitely wait and see there for me as well. Serum, I mean, you look at these charts and just like, yeah, I'm not going to touch that, right? I mean, like, just look at this nonsense. It's just all over the place. There's no trend here. There hasn't been a trend here since the downtrend. I mean, it's just been down and then crazy sideways, turtle soup, random walk, arguably even some sort of like diamond top situation, like multi-week diamond top. I don't know. I'm just making stuff up at this point, but it's clearly in all of this volume resistance. So I think it'll just stay here for a while until, like these other charts, if it gets above $130, it's game on. But until then, it's just going to get tossed around between 89 cents and $1.20, it looks like. Band, probably one of the better cases for an edge-to-edge move, a bullish move. I still need to buy some. I haven't pulled the trigger yet. Really was waiting on the pullback on BTC and ETH to see what was going to happen with alts, but this looks as clean as you're going to see it. Multi-shouldered, head and shoulders. We might get one more shoulder here. Maybe you've set some bids at around 590. You're thinking about getting in at around 590. But it's inside the cloud. You have your bullish TK cross, so it meets the edge-to-edge criteria. Your stop loss is currently somewhere around 590 to 550, basically from the Kijun to the cloud, somewhere in here. If it makes a lower low, it's probably done. But otherwise, this looks good for upside to 10. The issue is if this isn't going to move by itself, most likely, and if BTC retraces some more, I don't see alts doing super well. If we look at the band ETH chart, something worth doing if you're trading in DeFi land is looking at the ETH pairs, even though they may not exist. You can just make it up on TradingView. Band USD divided by ETH USD is band ETH. And you may want to take a second look at that, because if we're not bullish on the band ETH chart, but we're bullish on the USD chart, are you really making any money here in the long run? Probably not. If ETH is outperforming band and looks like it's going to continue to do so, then it doesn't really make sense to sell your ETH to buy band, even though the band USD chart looks good. You know what I mean? Like, you got to think about that. I think if you're like me, if you're like, okay, I'm going to send ETH to here and then use this DEX and blah, 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 the stars really have to align for some of these DeFi coins to do well. Now, that's not to say that you can, capture this move from 7 to 10, sell back to ETH, and or consider not selling back to ETH based on this band ETH chart. It gets super complex at that point based on what you want to do, what you feel comfortable doing. But this is also set up for a potential edge-to-edge trade. Definitely not as far along in the process, but something to watch as well. DOT, man, what a difference a week makes. Last week I was talking about cup and handle on DOT, and now on a lot of charts I'm seeing this inverted Adam and Eve, which is a V and a U, and it looks really good for more downside. I mean, it's everywhere. You'll see this on Doge USD, XRP USD, ETH USD. It tried. Looks like it got denied today, but it may continue that process over the next couple days. So seeing all these charts look the same to me is not bullish. The charts that look different, like comp, are clearly doing their own thing, moving to the beat of their own drum, decoupling. But a lot of these charts do not look good. This is definitely one of them. It might be a different story next week, but right now, I do not expect higher highs. This is a wait and see sell situation for sure. It's going to hit support around 435, but if this moves the way it should based on TA, it'll want to go to basically all-time lows, effectively. The early trading stages here on the 23rd or whatever, not a true measure of what's going on price-wise. So 350 is possible, 335 is possible if this moves the way it should move. Kava, again, much like the band ETH chart, it's kind of in that same stage where it isn't exactly in the cloud yet. You can still wait for this trade to set alerts at around $1.80. When it gets into the cloud, then you can judge and say, all right, do I want to start to enter here? Do I want to keep waiting? Do I want to wait for a bullish TK cross to be confluent? Do I want to wait for it to be above the 200-day moving average? Do I want to wait for this horizontal to break above at around $2? This could be just some random W double bottom or Adam and Eve again. Definitely all the questions I'd be asking myself. I haven't looked at the Kava ETH chart, but that's another thing to do. So definitely worth watching this over, UMA or MTA, whatever, those random charts doing a bunch of nothing, Serum, because this is at least setting up for potential upside, decent trade, 2x-ish, something like that. Sushi kind of looks like YFI. It's still bullish on cloud. It's above the 200 period moving average. It had a nice move since the TK recross above the cloud. It's above the resistance turn support at around $1.35. It does have a decent case for a bearish divergence here, maybe 3 drives, I don't know. This doesn't exactly inspire confidence down the long side, but trend-wise it looks okay for continuation. Not that it's going to happen before it tries to retrace to $1.70, But how I would play this is put bids at $1.70 and stop loss at the 200 moving average on the 6 hour. Because it still looks bullish. It looks different than some of these other charts I posted for sure. It's decoupled in that sense. But I'm not entering at highs with bearish divergence like that. Wing 4 hour, man, and again, like completely decoupled from a lot of this stuff. Look at this volume, just insane volume. Kumo breakout a few days before, or a few periods before. Massive move on the 4 hour. Hit some sort of VPVR level based on prior consolidation. I should go back and listen to what I said last week about targets, but that's usually a pretty obvious target, which is why I use VPVR. I don't have to think about, where was the last consolidation zone. It's just on the chart for you. Again, this is forming some sort of M double top or Adam and Eve, inverted Adam and Eve situation on lower time frames. So to me, it looks like the move is done at this point. It doesn't look like this will keep going, but that 4 hour chart I posted last week on the video, that's what you want to look for. That's why you want to stalk those entries on stuff like Kava and wait for a breach of the 200 period moving average, wait for the Kumo breakout, and then pull the trigger on these charts. BZRX, again, much like DOT, very correlated to each other for some reason, but at inverted Adam and Eve, again, you can see that pretty clearly here. Below the cloud, below the 200 period moving average, sitting at support on VPVR. Next level down happens to be the 1618, what do you know, of this potential chart pattern. So if this acts the way it should act, we're looking at previous consolidation zone as support at around 10 cents, 11 cents, 12 cents. And if it makes all-time lows, probably finding support at around 0.06 based on the measured move of the chart pattern. So definitely not bullish there. MTA, just like some of these, just nothing burger. There's nothing going on here. It's not above the cloud. It's not above the 200 period moving average. It's in consolidation hell in this VPVR land. No divs, no nothing, no volume. Definitely a wait and see. But you can always set alerts for this 200 period moving average or the cloud, whatever makes the most sense for your trading style. I just like to keep it simple and look at the 200 period moving average. Lastly, BNT. Another good example of the edge-to-edge trade, bullish TK cross, price inside of the cloud. In this case, your stop loss would be the bottom edge of the cloud here. This is a 2x-ish trade. Doesn't look super hot at the moment because it's dropped below the Kijun, dropped below the 200 moving average here. This could be setting up for some macro inverted head and shoulders, but I think it's still worth a punt if you're able to trade BNT anywhere. It's probably on some decks, I don't know. But you can see the stages of the edge-to-edge trades. That's the important thing. The ticker is whatever, the volume and liquidity, I don't care. But if you're studying these edge-to-edge potential setups, you'll get comfortable with when to pull the trigger, when some look better than others. Like Kava doesn't look like this, Band ETH doesn't look like this. They're just at different stages of the same trade setup. So if this was helpful, if I missed anything you're bullish on, let me know in the comments below, and happy trading.